My goodness, we got inflation running at a near 40-year high. You got the Fed this week striking transitory from its statement, and we've got fertilizer prices that have doubled, in some cases even tripled, since the start of this year. How is all of that playing out in food, and what does that mean for the company, both in terms of costs and pricing power on store shelves?
Yeah, well, first off, thanks for having me on the show. It's a first for me to be on your show. Really appreciate you having me. Yeah, everything you said is true. We really started in early 2021 calling out what we thought was going to be about 4% inflation in February, March, thinking about the full year 2021. And then all throughout 2021, agriculture costs, labor costs, transportation costs increased. And it really ended up being, it'll probably end up being for the year about 2 times, a little bit over 2 times more than we thought it would be from an inflation standpoint. So everything you speak about, corn costs, wheat, really freight is a big unknown sometimes to get a handle on the freight costs. And so what we're doing is, we're trying to find productivity initiatives within the company to take cost out to mitigate that increase on consumers. But in some cases, we are raising prices. We've done a few sets of pricing in 2021. We have a little bit set for 2022 and the beginning of 2022 as well, just because, as you indicate, those costs continue to climb, and we're trying to make sure that we're taking care of our customers as best as possible.
So as you look at to 2022, how would you expect those pressures to evolve? Would you expect that in the first half of the year you start to see some costs subside, or are you planning for a longer-term scenario?
Well, I think we're really planning for a longer-term scenario. I think the government is trying to do some things around freight and transportation that could be helpful to the entire industry. It's hard to look out, but we still believe that, like you noted, corn costs, edible oils, soybean oil, and cottonseed oil, and things that we utilize in the manufacturing process, we still see those to be elevated. Labor costs, we are guessing, will still be elevated into 2022 as well. We don't really know the timing of when that might abate, but we'll be layering in and getting the benefit of price increases that we put into effect in early 21. We'll lap into 2022, and some of the productivity initiatives that we're kicking into gear will really start to ramp up. So, I mean, it's not going to be easy street in terms of looking at those increased costs, but we're doing a lot of planning and a lot of work behind it to mitigate those ultimately for our own company, but as well as for the effect on consumers and prices.
Dylan, do you expect to see any shifts again with this new variant in terms of the amount that people eat at home versus eating out, and any long-term consumer taste changes following the entire pandemic period?
Well, I mean, Wilfred, definitely we lived through it. I mean, March 14th of 2020, April of 2020, it just started ramping up with a lot of eating at home. That kind of abated in the second half of last year. So, as we're lapping the second half of 20 and in the second half of 2021, the demand is really high. And I don't think it's a matter of variants or Omicron forcing people to stay at home. Everything I've seen from travel and everything we've seen from just, off-premise, on-premise, traditional grocery, traditional mass, club, C-stores, drugstores, everything has been very busy from a demand perspective. So we haven't seen a big shift at all yet in consumer demand, but it's been very elevated and continues to look like that's going to be so for the future.